we get an inflation report that's even a couple tenths of a percent lower than the Wall Street expectations, you see massive rallies in the metals and in the stock markets. So do you think we've seen the bottom of this cycle? Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics. And in today's show, going to talk with David Stein about whether we may have seen a bottom for the silver price already in over these past few months, where things might go from here, if there might be some additional interest in the precious metals now that we're seeing the chaos with FTX and some of the other crypto exchanges, which unfortunately has started to spread. We'll also be talking about some of the recent comments from the Fed governors, which imply that we're at least seeing the light at the end of the tunnel. So we'll be digging into all of that and more. Just wanted to add one note, however. This episode was recorded on Thursday, November 17th. And just because David mentions the silver price back on Thursday and how it was down about 50 or 60 cents at the time, which is not really material to what we are discussing, but just wanted to put that context in as you're watching. So with that said, let's begin today's show. Fortunate to be joined by David Stein of Kuya Silver, one of the companies that is actually very close to production, going to be bringing us silver. Certainly nice because actually a high percentage of silver relative to other metals in their portfolio. So going to be one of the true silver producers, and certainly a lot going on in the world today. And David, it's great to have you join me again on the show. Nice to see you back. It was great to see you here for Silverfest over the weekend, where we were talking about a lot of different silver related topics. And anyway, thanks for joining me. And how is everything going with you today, my friend?
Thanks, Chris. Great to be here. Yeah, things are going well. We got some news out and lots of stuff going on in the financial world. So, there's lots to talk about.
Well, let's dig right in. As we can see, been an interesting year in the silver world. It seems like it was a while ago when silver was back over $26 in February. Obviously, we had the sell-off throughout the year. And something that you and I were talking about right before we hit the record button. Of course, we've had this rally over the past couple weeks. And like you mentioned, it seems that we're towards the end of the Fed rate hikes. We can get into some of the commentary that's come out in just a little bit, but perhaps you could start there with what you're seeing in terms of the outlook going forward, where it's not as if we're still wondering, is this going to go to 7%, 9%, or 12%? But it seems like we can see the light at the end of the tunnel, and how you see that affecting the silver price.
Yeah, I think today's a great example. There was several different pieces of economic data that came out. I don't think any of them were really wildly bullish or bearish either way. They were all pretty close to expectations, slightly above, slightly below. And here we are. You can see, on that chart that you just put up, that the big sort of collapse in the silver price came around April, as I recall. Or the start of it, where it was at $25, $26, and then started falling. That was kind of when when the markets realized that that the tightening cycle was on. And I think now we've sort of passed the bottom a few months ago, and now it's just a matter of when and how much. And these little pieces of data that everyone obsesses over, in my opinion, really don't change very much in terms of where we're going with interest rates. The tightening cycle is coming to an end here, and it's just a matter of now when. And so I think you'll probably see things continue to be trending upwards, because I really think the market kind of has already realized that, with the lows that we put in there in September, right where your pointer is.
Yeah, and you mentioned it, but do you think that we've seen the lows from this cycle I would imagine that based on what you were just referencing of seeing the light at the end of the tunnel with the Fed and seeing the way the market reacts when we get an inflation report that's even a couple tenths of a percent lower than the Wall Street expectations, you see massive rallies in the metals and in the stock markets. So, do you think we've seen the bottom of this cycle?
Yeah, I do. I do. And again, take today. So I think one of the Fed governors spoke this morning, and he was saying, "Oh, we might raise to 7%, which is higher than the market thinks right now. The consensus is like 5 or 5.25 or something like that." And and so is silver going back down to $18? No, because I think again we realize like the we already know where we already know where rates are headed, and that's already priced into the market. The low's been put in. Not that silver is the end all and be all um, financial metric, but it's what I watch very closely. And I think if you looked at the gold chart, you'd see the same thing. And gold is obviously a much bigger market dollar value wise. So I think even though silver's down like 50-60 cents today, it's sort of like, my feeling is it'll just go back up, over the next few days as people sort of forget about what was said today and realize that, the end of the tightening cycle is upon us. We can see it on the horizon. And again, if it's just a matter of when exactly they pivot, but the market will already realize that several months before, and we've seen that with other rate cycles, and and maybe we've seen it in precious metals already as well. Maybe they're already telling us that the end of the cycle is upon us. In fact, that's basically what I'm saying. I think that they are telling us that.
I think that certainly makes enough sense, and something I'm curious to get your opinion on. Obviously, we've been learning a lot more about FTX, Sam Bankman Fried, and the saga that's going on in crypto right now, which, as things develop, we're beginning to see it affect other crypto exchanges. Here, Genesis halts lending redemptions. If we Google crypto contagion, you can see that BlockFi has run into trouble. Obviously, we'll see how it develops. But do you think that could be a factor in terms of some of the money that has gone into crypto, at least with some more concerns now and people starting to lose a lot of money? Do you think that could change the way some of the people view crypto, and then going back perhaps into metals of like gold and silver as something a little bit more safe and secure?
I mean, I think this event that we're seeing with crypto has numerous implications for for the markets, including yes, if you're able to get your money out and move into another sector, precious metals are a great safe haven. And some of the reason why people buy crypto has some commonality with gold and silver in terms of that sort of independent of government store of value. So I think yes, gold and silver, will indirectly benefit from that. I mean, the other thing is that this is going to be a factor in causing inflation to fall as well, because a lot of or at least some of the inflation that we've seen in in consumer goods and all sorts of things in the last couple of years have been driven partially, or at least in some way, by the wealth created in the crypto industry in the last few years, and that's obviously now collapsing, going the other way. So I think to some extent you'll see that in inflation data creeping in over the coming months and quarters.
Yeah, that makes a lot of sense, and perhaps not a complete accident that we're seeing this at this particular time where we are seeing a tightening of the monetary policy. And actually, you had mentioned a video the other night at Silverfest that I took a watch through this week, and it was you mentioned this because of some of the similarities that we might be witnessing to the crash of 1929. I'm going to play just a short snippet of this here, and then you can comment. But I think some of these conditions will sound familiar, so let's take a listen here.
For almost 8 straight years, stock values had been rising. By 1929, there seemed to be no upper limits in this world of paper, numbers, and dreams.
It was an arena of unbounded opportunity where somebody like my grandfather could come into it and make a fortune. So many people made so much money in the market that late in the 20s, it seemed that you just couldn't go wrong buying stocks in American companies.
David, does any of that sound familiar, whether it's the NASDAQ or some of what we've seen in the cryptos, which not a matter of bashing cryptos, but just the idea that it seemed a lot of these things just have to continue going up, and now we're seeing some decline in that. So is that, I think we're seeing some similarities between the two time periods right now?
Yeah, I mean, what he's talking about there, Nesbitt in that interview from 1990, is is the peak of a bubble, right? And we definitely saw that at some point in the last year or so with crypto, where just like you could buy any coin or token and it's probably going up, right, in value. Certainly that's not the case today. So in that sense, I think it's the bubble's already burst. But yeah, there are a lot of similarities. I mean, that is a great documentary, just in terms of the anecdotes and stories about how the bull market of the 20s affected people's lives and what they were doing, trading stocks, going into debt to trade stocks. Obviously that was a big factor in the eventual crash as well, the margin calls and all that kind of stuff. So that happens again today, and happened in 2001. So yeah, I mean, it's really interesting. I think to me, the pivotal moment in that documentary, and it's kind of in the first 20 minutes or so, I believe, is when they talk about how the bankers at the time would basically collude to move the stock prices up, and then basically pump and dump. But big companies, they would do it with RCA and huge, the leading companies at the time, and basically manipulate the market. And I think that has some similarities to what we've seen in crypto the last few years as well.
Yeah, there's certainly a lot of similarities. Seems like a familiar banking model that we're living through now as well. So appreciate you sharing that. I'll put the link to that in the description field below if anyone would like to check that out, because it was interesting and provides some parallels. Although on the other hand, I guess people could say, well, why would that be different about silver versus any other asset? Although here's a presentation. I'm not sure if you're familiar with Matt Watson, but gives quite a presentation on the silver supply and demand, especially with solar. And I'd love to get your comment on a short snippet that I'm going to play here, where he talks about at least some of the projections and how things stack up. So let's take a listen here.
Silver today, just to give your listeners some context, in 2020, 115 gigawatts of new solar installations globally. It consumed 10% of a rather large silver market, a little under 100 million troy ounces of silver to accommodate that 115 gigawatts of new installations. The scale that Joe Biden's describing and that Arena is describing is somewhere between 2,000 gigawatts to 3,000 gigawatts of new installations per year by 2050. And even though there's design thrifting that goes on with solar panels and the amount of silver used per watt, where is all that silver going to come from?
David, I don't know if he's counting on you and some of your friends, but going from 115 gigawatts per year currently to 2 to 3,000, I thought that was helpful.
That's 20 to 30x basically.
Yeah, which I thought was a nice clip because we hear about the solar demand, but nice to actually get some numbers on it. And I guess the question in there is obviously there's the monetary premium, which certainly we talk about a lot on the show, but it's almost like to me there's two ways that silver goes up. Certainly you could have financial chaos driving into the monetary premium, but even aside from that, some of these plans that they're doing suggest quite a gap in the underlying supply and demand fundamentals.
Yeah, I mean, I guess one of two things is going to happen in that particular instance. And by the way, he's only talking about the United States too, not the rest of the world, right? He's talking about Joe Biden's sort of an environmental long-term goals, which obviously is going to far outlast him, but to 2050. Nevertheless, you just keep that in mind that there's China and there's India and there's hundreds of other little countries in the world that all have aspirations to build solar panels or install them. So anyway, where's the silver going to come from? Well, two things. One of two things has to happen. Either you need much more silver, and that's only going to happen if the price is way higher than it is today, or those 2,000 gigawatts of in 2050 are just not going to be built. So you can't have your cake and eat it too, is the bottom line. If you want to build all these solar panels and collect solar energy, you need silver and you need a lot of it. And we're far below the levels that he's talking about in terms of silver. That would basically take we'd use the entire annual silver production in about 6 months under that number. And again, that's just for the United States.
Yeah, and then add in that we have seen increased investment demand in the U.S. Certainly, India is on pace to take in about 350 million ounces of silver this year. Global mine supply somewhere 800 to 850 is the expectation. So a lot of factors adding up. When that will play out in the price, we'll see. But certainly, I think another factor that at least leaves me feeling more comfortable about a floor under the silver price, and certainly that will affect the miners quite a bit. And something you and I talked about a couple of months back is the degree to which some of these mining stocks have sold off relative to bullion. Now, we've seen a bit of a rally here. The SIL is up 15% since October 10th. Take a look at the SILJ since September 19th, up 22%. Although still relative to the actual silver price, we see it's quite on the low end. Here is a 12-year chart and showing us at a 1.28 ratio. So the lower this gets, that's the cheaper the silver stocks are relative to the silver price. We have had 1 point lower back in 2016, but based on what you're seeing, obviously you're running a company, but you also invest in the sector as well. So do you still feel like the stocks are still relatively undervalued to even the current bullion level?
Oh yeah, they're way undervalued. I mean, we're just maybe looks like we might be starting a bull market. But you can barely even notice that on that chart that we're even up right from the bottom. So no, I think it's got a long way to go. These runs can last years, several years, and basically two things happen when you get into a precious metals bull market. One is that silver outperforms gold, and the other thing is the equities outperform the metals. And basically, until about a few weeks ago, the exact opposite was happening. So that we were in a bear market for precious metals and precious metals equities. But if that turns around, then you'll see a nice few years where things will run, and I think we're just at the beginning of that. And it sort of ties nicely back into the macro story, is why we've been in a bear market. Well, because there's been sort of the macro story the past few years with the tightening, the strong US dollar, et cetera. And that looks like it could be, starting to reverse course here.
Yes, and as you mentioned, we did have some recent Fed commentary out. Here is Lael Brainerd saying it may be soon appropriate to move to a slower pace of rate hikes. Again, to be clear, I don't think any of these guys are talking about rate cuts or anything in the near future yet. Seems like we're getting an increasing probability of 50 basis points as opposed to 75. I see that 80% chance this morning of a 50 basis point hike in December. We have comment from Susan Collins. Risk of policy over tightening has increased. And then also Fed's Daily says rate peak of 475 to 525. We're currently at 375 to 4%. So if you get 50 basis points, not even the 75 in December, that leaves another 50 to 75 basis points, which means we would see a slowing in the pace. And again, I just think back to that inflation report where it was just a touch under expectations, and we saw what happened. So does seem like we could be getting towards the end of that. And at least at this point, that largely we've been hearing about this for so long that it would seem like most of this, at least theoretically, should be priced in at this point.
Yeah, I think that's my view, is that the whole concept of the Fed tightening is priced into the market, and was priced into the market months ago, and now it's just a matter of when and how much and what happens after. But you're going to see the tightening cycle end in the next few months or quarters. You're going to see the US dollar might have already peaked, and it's going to start trending downwards for several years. And then likewise precious metals will start in an uptrend.
Yeah, and then add on to that, we have other developments happening, such as BRICS to expand soon, Saudi Arabia keen to join, which we don't have to dig too deeply into that today, although you just continue to see a list of countries that are moving away from the petrodollar continue to grow, yet, as you mentioned earlier, continuing to see a pullback in the real estate sector as well. So a lot of things suggesting that, like you mentioned, we're getting towards an end. And this doesn't even include that should you continue to see trouble in real estate or things like what's going on with the de-dollarization, the possibility that you do get an overt breakage of something, which still leads to that case where you could see more quantitative easing or rate cuts if you do see something really getting out of control, which perhaps hasn't happened as quickly or as forcefully as many have suspected to this point yet, but certainly on the horizon. So a lot to suggest that silver still remains a good place to be as an insurance for some of these things. And David, before we wrap up, I know you had some news out recently as you continue to expand and explore some of the projects that you're involved with down in Peru. And perhaps you could tell us a little bit more about what you found recently at your Carmelitas prospect.
Yeah, we're very, very excited about that. It's it's a group of properties we bought last year, and we were able to go out and do a sampling program there for the first time about a month ago. And yeah, we came up with some really good results, not only at the Carmelitas mine area, but actually our geologists discovered a new zone that we were not aware of before. It's about 1.2 kilometers north of the mine, which we're calling Carmelitas Norte. And actually, some of our best samples from the program came from that new zone, the Carmelitas Norte zone. So including that highlighted one that we highlighted in the press release. So that's, Bethania is the gift that keeps on giving. Everywhere we look, we're finding these mineralized silver polymetallic veins, both at the Bethania property and elsewhere, including, now Carmelitas. And, this is very much how Bethania began, with veins at surface. Then you go, at depth, and you can figure out, which ones are the better ones, because there's so many veins that you can observe at surface. Some of them are going to be better than others, and those ones you start mining, and that's exactly the history of Bethania going back 40 plus years. So and we've got many years there still to go. Very, very exciting, and lots of potential, even at our original Bethania property, where essentially no modern exploration has ever taken place. They've just been following veins in the side of a hill for the past 40 years. So yeah, we're it's nice on the one hand, the results are great, but it's also nice just to see the concept being proven out. That this is a kind of a maybe duplicate isn't quite geologically the right term, but it's very, very similar to Bethania in terms of what we're seeing, and that's a good thing, because we know Bethania is a great silver mine and project, and if we've got a second one that's only 3 kilometers or 2 miles away, that's huge.
Well, I know you've been excited about the exploration potential in addition to what you've already established at Bethania. So congratulations on these results. And what's the next follow-up step with what you have here at Carmelitas?
Well, I have to say, when I first saw these results, the first thought was, I wish we did like 5 times as much sampling, because you can go and you can take lots of samples at surface. It's relatively easy and cheap to do, and it's just great data collection, because then it really gives you a good idea of where you should be drilling. At the main mine zone, we still have to kind of investigate whether or not it's safe for us to go underground, and we can take some samples and basically start putting the veins into 3 dimensions there. But whether or not we do that, that's kind of a side note. Whether or not we do that, the next step would be then to drill there as well. The veins at surface, we're at the very top of an epithermal system, so we really need to drill and figure out how deep they are, where the better zones are in terms of grade and thickness. And in order to do that, the best way to do that is by drilling. So that would be the next step there, is to bring a drill and start going nuts, drilling holes.
Well, congratulations on that, and we'll be excited to get the drilling started. And I know you've been excited about what you've been searching for and finding. And perhaps, can you just let folks know, if they have questions, would like to get more information or find out about the results, the best way to get in touch?
Well, I always like to point people to the website first, kuyasilver.com. It's a great starting point with all the information, all the key information right there at your fingertips. And then you can contact us. You can book a meeting with management. You can see all of our social media. If you want to follow us on one of your preferred social media network, that's all there from the website. So that's where I would start.
All right. Well, appreciate that, David. And you can find out more at kuyasilver.com. And thanks for also checking in and going through some of the economic developments. Interesting environment out there, and a lot of things happening, yet certainly after a challenging summer in the silver world, some room for optimism going forward. So David, thanks again for joining me, and congratulations again on the results, and we'll look forward to catching up again soon.
Thanks, Chris. It was this was a fun conversation, and look forward to doing it again.